in the heart of New York City. Long before skyscrapers pierced the sky and subways hummed beneath the ground, there was a quiet street. Narrow, unassuming, almost ordinary. Yet behind its silence, something powerful was taking shape. A force that would rewrite economies, build empires, and ignite some of the greatest financial scandals in history. They called it Wall Street. But our story doesn't begin with flashing stock tickers or roaring trading floors. It begins with something far older, an idea that money, if organized, centralized, and controlled, could shape the destiny of nations, and it begins with the first bank. In the late 18th century, America was young, fragile, drowning in debt, and desperately searching for a way to stand on its own feet. 13 colonies had just fought a costly war for independence, and victory had left their treasury empty. Roads were broken, soldiers were unpaid, and the economy was crumbling like wet paper. Into this chaos stepped a man whose mind worked like a financial machine. Alexander Hamilton, sharp, brilliant, controversial Hamilton believed that money was not just currency, it was power. And if power was not controlled, it controlled you. Hamilton proposed something radical: a national bank, a place where government funds would be centralized, where credit could be created, where the economy could be rebuilt, strategically, methodically. To many, it sounded like salvation. To others, it sounded like a threat, because a national bank does not only handle money, it handles influence, and influence can be dangerous. While Hamilton argued for stability, his opponents warned of something darker. What if this bank becomes too powerful? What if it falls into the hands of the wealthy elite? What if the government itself becomes dependent on bankers? Fear rippled through the young nation like a quiet storm. But Hamilton pushed forward, and in 1791, the Bank of the United States was born. It wasn't just a bank. It was the beginning of a financial system that would one day rule global markets. Yet, as soon as the doors opened, pressure began to build. Money flowed in. Loans expanded. Trade increased. And with it, ambition. Merchants saw opportunity. Politicians saw leverage. Speculators saw a goldmine. And deep inside Wall Street, still, a small trading hub, at the time a new class of men emerged. Men who believed that wealth could be created not just by building things, but by buying and selling them at the perfect moment. They began gathering near a buttonwood tree to trade bonds and stocks, forming what would one day become the New York Stock Exchange. The bank and the traders became two engines of a growing machine. Each fed the other. Each depended on the other, and each quietly fueled the rise of Wall Street. But with growth came shadows, because money has a way of revealing the best and the worst in human nature. Ambition slowly transforms into greed. Strategy morphs into manipulation, and opportunity into obsession. Just a few years after the first bank's creation, rumors began spreading. Insiders were using government information to profit. Politicians were making private deals with wealthy and a handful of powerful men were gaining control over the young nation's economy. Whispers of corruption traveled through taverns and newspaper rooms. Was the bank still serving the nation, or was the nation now serving the bank? The tension grew. The cracks widened, until eventually, the system trembled. The first major scandal struck like lightning. Speculators began manipulating government securities, driving prices up and down with insider knowledge. The public was outraged. Newspapers accused influential men of selling the nation's future for silver. Politicians turned against each other. Friendships collapsed. Alliances broke. Even Hamilton was dragged into the chaos. He was accused, investigated, attacked, his reputation shaken. The scandal revealed something terrifying. The financial system, still just a skeleton, could be exploited brutally, and this was only the beginning, because once the doors of manipulation open, shutting them becomes almost impossible. The very institution created to stabilize the economy had now become a battlefield. Debate raged over the bank's power. Should the government control it? Should private bankers control it, or should it be destroyed entirely? In the end, political pressure won. After just 20 years, the charter of the Bank of the United States expired. Its doors closed, and the first bank disappeared. But its impact did not. Something had been unleashed on invisible financial infrastructure that would continue to evolve, expand, and shape Wall Street into the powerhouse it is today. With the first bank gone, a vacuum formed, and whenever there is a vacuum, someone steps in to fill it. Financiers, private banks, and wealthy families began expanding their influence. New financial institutions emerged. Markets grew larger. Speculation became wilder, riskier, darker. The rise of Wall Street was no longer just about building an economy. It was about controlling it. Every boom was followed by panic. Every rise followed by collapse. The Panic of 1837. The Panic of 1857. The crash of 1873. Each crisis left deeper scars and taught sharper lessons. People realized that markets were not ruled by logic, they were ruled by fear and greed, by human psychology, by whispers, rumors, and the unpredictable pulse of millions of decisions. And in each crisis, certain men found ways to rise above the chaos, to profit from disaster, to accumulate power when everyone else was losing it. Names like J.P. Morgan, Cornelius Vanderbilt, Andrew Carnegie, men who reshaped industries, governments, and sometimes the world. By the late 19th century, Wall Street was no longer a street. It was an empire, a beating heart of global finance. Yet, the ghost of the first bank lingered, because the same question remained: who truly controls the economy? That question exploded again in 1907, when panic returned with brutal force. Banks collapsed. Markets plummeted. Fear spread like wildfire. And once again, private financiers, not the government, had to step in to save the nation. This moment changed everything. It forced America to confront a painful truth. A modern economy could not survive without a central power regulating money, credit, and banking. And so, more than a century after the first bank vanished, its idea was reborn. In 1913, the Federal Reserve was created, a new central bank, a new guardian of the economy, a new force behind Wall Street. But even this didn't end the scandals. It didn't end the greed or the power struggles. From the Great Depression to insider trading rings, from corporate fraud to market manipulation, Wall Street's story has always been the sum and endless tug-of-war between innovation and exploitation, growth and corruption, progress and collapse. And beneath it all, a simple truth remains: the moment humans touch money, desire awakens, and desire, once awakened, shapes the world. Today, when stock markets move billions in seconds, when financial news makes presidents tremble, when a single rumor can shake global economies, we are still living in the shadow of that first bank, still navigating the system it set in motion, still wrestling with the consequences of a world where money flows faster than truth, and power hides in balance sheets and boardrooms. The rise of Wall Street was not sudden. It was not accidental. It was a slow, powerful wave built over centuries by ambition, innovation, conflict, and scandal. And even now, its story is far from over. Because as long as money rules the world, someone will always try to rule the money. Thanks for watching, and if you enjoyed this journey through history, don't forget to subscribe for more.